Hi, everybody. This is David Skarica, editor of addictedtoprofits.net. And with me is Edward Kelly. He's the CEO of Inca One, a company we've talked about in the past. A very unique deal because they have a gold processing plant in Peru. So this is not just a mining company, and they have cash flow and et cetera. And they actually have a bullion store too, which we'll talk about. So, and actually, it's, I think, one of the most undervalued deals out there. And we'll get into that in a second. So Edward and I were both kind of running around today, then did this. He's in Peru. I have something to do tonight, and I just got home. So I'm a bit disheveled. So we're just gonna do it, as just the screen share. And I told him off air, no one wants to see our ugly mugs anyhow. So, so welcome here, Edward. And yeah, and as always, a full disclosure is I have kind of a marketing contract with the company, and my family owns the company, and I recently purchased some shares too. And while, by the way, the month that me and my partner Mike Swanson market the company, I do that during that 30-day period would never sell a share. That's kind of our policy. So, and thanks for being here, Edward. And just quickly tell us about, I know we'll get into the news that you just had, that you had $3.9 million in revenue in June, or sorry, in May. I just reported it a few days ago. A huge increase year over year and month over month. So maybe you want to talk about it. I have it up right now. It shows the month over month change is 179%, and shows the deliveries, the mining and milling and gold production.
Yeah, hi there, David. Good to be back with you and your listeners and subscribers, and talking about Inca One again. It's been, I guess, probably about 18 months since we last spoke, hasn't it?
Yeah, and it's actually been a pretty crummy 18 months in the junior market, and even with gold when we're going to talk about that later too. Even gold at a pretty good price. There's numerous reasons for that. Partly some of the inflation, higher costs that have come in, but I know it. But you guys are still, fundamentally very sound and doing well.
Sorry. Yes, that's right. Came off a really strong year, our strongest year in 2022, and we had just topped over the $51 million US in top line revenue, producing around 25,000 ounces of gold. We do have two plants in Peru, one in Chala and one in Yelka, both in Arequipa. They're about 50 kilometers apart from each other, just on the Pan American Highway. And we've got 450 tons of capacity, which is comparable to one of our peers. They're around the same mark, which I'm sure you've talked about in the past. We've got we did about 25,000 ounces of gold and only used about 44% of our built out and permitted capacity. So knowing that once we can buy higher grades and buy more mineral, then we should be able to get up to that same range as our peers out there in that space.
Yeah, and one thing I pointed out in a video I released, in the last day or so, where I talked about stocks that are cheap and undervalued in certain sectors, is that there's only really one other company that does what you do, and they're called Dynacor. And
one other public company.
When they're public company, and they have about, or estimated this year to have about 200 million in revenues, and their market cap's about 115 million. Whereas you guys, like, I don't know if you'll have 4 million every month, but annualized, that would be, say, 48 million. So let's say a quarter of the revenue, but your market cap is only like 1/16, what Dynacor is.
Yeah. And the reason for that, I'll just say, is that again, we are buying, we only used 44% of our built out and permitted capacity of our two plants last year. We did, as I mentioned, over 50 million. So we averaged just over 4 million in top line revenue last year per month. We're kind of at our peak right now with the available working capital that we do have, which is purchasing around 5,000 tons per month. Not to say there isn't more out there, but in this business, you need to be able to pay your miners within, say, 48 to 72 hours after you've agreed to commercial terms. And just to be able, if you don't, then it's kind of like you're a bad person with a bad company and managing your cash and your commitments. So we've made a commitment within the company to only purchase around, it's hard to say no sometimes when it just comes in and they're okay with it, but around 5,000 tons per month until we're able to secure further funding. Now and I'll just say that we're not going to be going to the market for issuing shares to be able to secure that additional capital. We're a cash flowing company now and have been this is our 10th year of operations. So we've made the commitment that we're going to be using local banks and securing lines of credit to be able to purchase that mineral. It's really at this stage of our business, and we're just bridging a gap from the time that we purchase it to the time that we get paid for it from the refinery. It's about 45 days, and it's just, we don't want to dilute ourselves and shareholders for that mechanism. So I think once you see us secured that, then the market will know that we're off to the races and going to be buying more mineral, moving that kind of threshold from 5,000 to 10,000 tons per month plus that we'll be able to do and increase our grade, which increases our margins.
Okay, and and just another interesting thing here with Dynacor, and you're talking about increasing your capacity. If someone looks at their numbers, what they'll see is over the last few years, they were at kind of the same way. They were not at full capacity. Like for years, their revenues were around 100. And then they exploded, I think it was in 2021 and 2022, to 200 million. And the stock, even in a pretty porous market for precious metals, doubled in price. And it's held up where a lot of other stocks have not acted well. So what I'm trying to say is if Inca One is able to do that, I would expect that you guys will just go up, on your own merit and won't even have to even worry about, a bull market in precious metals equities.
Yeah, that's right. I mean, in 2021, I believe it was, they were probably the best gold stock. They're I wouldn't say they're a mining company, but a gold producer on the TSX. Try to find one that was better. I don't think there was. So, but they expanded their plant. They've got the available working capital. They've been in the business about 10 years longer than us. So they do have that line of credit kind of established with the banks, and they were able to expand from 250 to 300 to 350 to 400 to 450, and now they've actually expanded again to I think closer to 500. They keep expanding. Now they're in that cash flow cycle. So it is a nice business because you don't have the mining risk or the exploration risk or investment to go into that side of the business. We just purchase mineral from the miners that they mine it, and they need us to be able to process it, and we own it at that point and sell it to the refinery.
Yeah,
so in this business, as much gold you can produce, there's always a bid there to buy it.
Yeah, and I have the stock chart up right now, and it shows that first of all, you're kind of since about last October, you've been basing like we call it the box theory, where like you're kind of going sideways, and and then usually when you come out of that, like I put some other stocks in my newsletter recently that were into that had done the exact same thing, and now they're coming out of the base and have started to kind of like explode to the upside. So, and like I said, with the stock only, like when you think about it again, you have $3.9 million in revenue last month, and the stock has about a 7.2 million, Canadian market cap. It's like it's really mind-boggling about that, about how cheap it is. So I think one thing we'll go on to before we go to the bullion stores. A lot of people may wonder, and I have a chart of gold up now too, and gold's kind of had this triple top at around 2,200, and I think it's just kind of coming off the resistance before it breaks out, and if you go look what gold did in 2016 to 2018, it was very similar. It was like this triple top or around 1400, and then it exploded out in about mid 2019 and then went right to 2100. And if you take that from the bottom of the 2018 market, 1200 to 2100, that's like a not 75% move. So if it were to do this from the bottom, say of 2022, 75% from 1600 is about 2800.
Mm-hmm.
So,
Mm-hmm.
but anyhow, so a lot of people might wonder, well, we're right near 2000 in gold. Why aren't these stocks acting well? And you said something interesting off air about, the inflation of the past couple of years and higher costs. So it's kind of like that gold price isn't fully filtering down to profit. If you want to expand on that.
Yeah, I think that's kind of people have been asking. Well, hey, we're back up to $2,000 gold and bouncing around that level again. Why aren't the gold stocks at 52-week highs like they were in early 2000 or 2020 and again in 2022? We took a run, but I think the bottom line is that over the last 3 years, we've seen a lot of inflation, supply chain issues that we're just coming out of now. And we really need to see the next phase, and you've shown it well here, that triple top. Once we break past that, I think we'll see for gold prices to run around. I've been hearing around 2,500. You mentioned 2,700 there. And that's what's going to be the catalyst to be able to move gold stocks, the majors and the mid-tier gold producers higher to the levels that they were, say, the PE ratios back in 2020 and 2022.
Yeah,
that's my theory, but I think it costs more to run a mine and labor and costs and energy than it today in 2023 than it did in 2020. Period. Right? Like
yeah. I just put a chart up. I'm actually, and just bear with me because I'm going to show it on the little thing you can do before it. I'm just showing the underperformance of gold or gold stocks to gold, right? And we'll see this here.
And you can see, whether you look at some of these other ETFs, so on and so forth here. Like I follow the HGU. We're at $2,000 gold, and it's only at $13. Whereas in 2020, when it was at 2,000 gold again, it was up at $42. And I think that's just again, the reason for that is that there's inflation that wasn't present in 2020. That's present today. So we're going to need to see a higher gold price to be able to get this moving higher.
Yeah. So in this chart that I've put up, it shows that again, gold since 2020, since it kind of really spiked after COVID started, has actually outperformed the gold stocks by 15%, and the gold stocks have trended lower. And that's interesting because usually the gold stocks outperform gold, when gold moves higher. So that and really they've really underperformed the gold since that early 2022 top. So I just wanted to show that, and I think you're right on. Like, you look at input costs from diesel to just, labor, materials, everything is up everywhere.
Food.
Yeah.
You got to feed your miner, you got to feed your crew and people at the camps.
So. And food has been probably the highest form of inflation in the last year, so anyhow, if we can move on from that, and but now inflation is, I think, kind of flattening out and trending a little lower in the short term, partly because the year-over-year comparisons are so easy. Because the spring and summer of last year were the big spikes after the Russian invasion, and now we're seeing the year-over-year comps, and that's why inflation is down to 4 to 5%. So that also should maybe take a little pressure off the production cost. So now we'll go into the bullion store. So what makes you guys unique as well, and I think, if you correct me if I'm wrong, I think First Majestic does this too, but you can buy gold coins,
silver.
They do silver, but you can buy coins off the site if someone's interested. Usually coins are minted, by governments, UK, Canada, US, South Africa, Australia, almost every Western government has a gold coin you can buy that's, certified 0.999. But you guys also have
Mhm.
your own if you want to talk about it.
Yeah, we just like to encourage again that people say own gold, and there's many different various forms of owning gold um, to be able to protect yourselves in times of uncertainty. And we do this just to be able to make it as a nice keepsake for shareholders primarily. And we give shareholders special pricing. So if they own more than 5,000 shares, I think we give them a discount of around $50 per ounce
So become a
in purchase.
shareholder.
It's an extra incentive, right? Not a lot of shares, only need 5,000 shares, and you get a nice keepsake. And um, you never know when you will need to use it again.
And you're helping your own investment because them selling the gold is how the company makes money,
Yeah,
Yeah.
yeah.
So again, thanks for being here. I think that was really good. That was a great overview. If you want, just tell us a little bit, maybe going forward, what you're expecting for the rest of the year, and we'll finish it off.
Yeah, priority for the company is to maintain that buying or with our current cash and working capital we have available around at this gold price is going to be around the 5,000 tons per month level. We have a big priority, obviously, to raise additional non-dilutive working capital to get us to full production. And at any time now that those types of things could come into play, and we'll be able to increase our purchasing of tons. And we've got capacity to go to 450 tons per day. It just takes more working capital to be able to do that. And again, we don't want to do that with dilute any further dilution. So once we've got that secured, we'll be increasing our purchasing per month. And I think as a direct comparison, Dynacor, they've got similar capacity, and we can take it by increasing our grade and filling those empty tons right now to produce around 100,000 ounces per year, and get to north of $200 million a year in top line revenue with a nice profit.
Yeah, and again, if people just look again, you're talking about 200 million. If you do that, and you get the Dynacor valuation, you're talking about the stock going up, maybe 16 times from here. I know, you never guarantee any return, but that would just be
Yeah.
If you have the same valuation. And one thing again, I'll say about Dynacor,
as we continue to prove out the business, it wouldn't happen immediately, but
yeah, that's going to
over
take
time, and
a while. Yeah, it's going to take
quarter
a while.
by quarter, it will.
But Rome wasn't built in a day, as they say. So it's, and also, like I said, one thing I like about Dynacor is if you're an income investor, they pay a 4% dividend. And, dividends tend to be hard to found by in precious metals and mining stocks, because it is such a low margin business.
Yeah, I think they've proven the business model. So they produced I think a profit of around $10 to $12 million last year, net profit, and they paid a 1 cent per share dividend per month. So nice little dividend, like you said.
Yeah. And it's basically 12 cents a year. Okay, well, thanks for being here, and we'll talk to you in a few months' time.
All right, thanks, David.